I entered a trade around this breakout, on this breakout, I believe. And then the stock just goes straight up 100% in 2 weeks. This trade, I would say it would be my turning point of my trading career, trading journey, because I really shift my focus from climbing back the trough and making back all the losses to really focusing on making the right decision, be disciplined. Speaking of the actual performance last year, I actually entered the USIC on February. So my January performance was not included. So the actual return in 2024 was 340%. As long as I can find a way to manage my risk in a breakout, that is a good setup. But also I can't predict the return of my trade, but I can limit my risk. I can set my stop. I can limit my risk. There's a parabolic relationship between the stop and risk multiple. The higher the return, the larger the absolute increase in the risk multiple. I'm focused on finding a good base or a large base on weekly, but that's not much. Sometimes the stock could still have really huge move without getting a huge base or a decent base in the weekly to grab all the opportunities. Oh, I missed this one, I missed that one. Don't feel frustrated about it. You're like missing the opportunities is very, very common in trading. And sometimes you just have to let it go and find another one. There will always be another opportunity in your markets. When you are confusing about whether to take this trade or not, normally just don't take it. Like normally it would be a loss. Like if you're hesitating or confusing whether you should take this trade or not. From studying charts in the past, I have noticed normally when a stock makes a big move, it tends not to revisit the low of the breakout days. Normally when a stock has a big move, it will not go up 10% a day and then goes down 15% a day and then went up 30% another day. Normally it's just grinding higher with the rising moving averages. It won't be that volatile and choppy. So sometimes studying parabolic shorts does not mean that you have to take the shorts, but you can help you to exit your longs in a good position, in a good rise within a strong upside move. The equity curve feedbacks is really helpful for you to identify whether the market is favorable for your own trading strategies or for the style. If the indices are weak but your trades are working well, keep going and don't let the indices to affect you that much. And you could be a little bit conservative, but as long as your trades are working, I don't think there's a big reason for you to liquidate all your longs and then be so cautious and vice versa.
Hey everyone, welcome back to another episode. As always, we bring top traders, US investing champions, and market wizards here onto the show to share their journeys, their strategies, the mistakes they made throughout their careers, and key learnings that they want to pass on to you guys to save you time, save you money, and improve your performance. We've been lucky enough to hear back from many viewers over the past few years about how much of a positive impact this podcast has had on their trading journeys, and we're incredibly grateful for all the support. If you're looking for a free, quick, and easy way to give back to us and show us some goodwill, please double check that you're subscribed down below. And if you aren't, go ahead and click that button. This helps us out in two ways. First, it lets YouTube know that this is a valuable resource and it'll push it to a wider audience of traders. And two, it allows us to reach out to bigger and better guests in the future. So thank you so much for your support in advance. Also, go ahead and click the like button if you haven't already. And if you have any suggestions for traders you'd like us to bring on the show, also let us know down below in the comment section. And with that said, thanks again for your support, and sit back, relax, and enjoy. All right, welcome back everybody to the TraderLion podcast. I'm your host, Richard Moglen. This is brought to you by the Ultimate Trading Guide. You can pick up that excellent free resource down below in the comment section. Joining me today is Martin Luke, top performer in the US Investing Championship of 2024 with a return of 283%. Fantastic result. Today we're going to dive deep into his background, trading style, the most impactful trades from last year, get really into the details about his entries, his exits, his stop loss management, all of that, and dive a little bit into current markets and some short setups that he's been working on personally. So Martin, first of all, thank you so much for your time. Congratulations on your performance last year. I forgot to mention as well, you're very young, 22 years old. So it's great to see, up and coming trader just like you. So thank you so much for your time and for being here.
Thank you, Richard, and great for having me here.
Yeah, of course. To start with, I always like to bring it back to kind of the very beginning. I'd love to hear how you first got interested in trading and the markets. And I know you prepared some slides to go along with us, so maybe this would be a perfect time to share that. And I'd love to hear kind of some of your key influences because I understand Christian Kalayjian was someone who you learned an immense amount from. So yeah, I'd love to hear about where it all started.
Yep, perfect. And first, I would like to talk about my journey. And I started trading in October 2020. It was the a last bit of the free money market, and during that time, Hong Kong government has a cash payout scheme of 10,000 Hong Kong dollars, which is around 1,300 US dollar, which just met the minimum requirement for opening a brokerage account in Hong Kong. So I decided to deposit that money into open an account, and that's how I started my trading journey. And definitely is COVID back then is on lockdown, so I have a lot of free time for spending in my room, and so I think trading will be one of the best way to kill time.
Yeah.
So back then there are many YouTubers, and you can see one of them in the middle is J Law, which is the champion of the United States Investing Championship last year. And during the 2020, there are so many YouTubers or the KOLs in Hong Kong are talking about the VCP pattern. Like I think uh, most of the people trading in 2020 would come up with some of those videos, and I'm one of them. So the VCP pattern just really intrigue me and attracts me to study more about the setup. So this is how I find out Mark Minervini and the breakout setups and the how to set the risk management.
Mhm.
And those YouTube videos are the early exposure of a systematic trading to me.
And just to jump in, were your parents involved at all in the markets? How did you first get interested in trading in the first place and sought out kind of these videos?
Um, Actually, it's um I think part of it is really related to my major, to the field of studies in university. I'm studying finance and economics.
Hmm.
So most of the lectures or the study will talk about the stock market, and some friends in the university are also talking about the stock markets, and especially in 2020, the US market, after the March crash, it just did a V-shaped recovery.
Yeah.
So compared to the Hong Kong stock market, I think the US market just outperformed most of the markets in the world in 2020. And many people are sharing about how much money they have made in the US markets. And um, during that time in Hong Kong, the trading or investing in US market is kind of hot topic
Hmm.
in 2020. So that's I think the major reason that I started trading.
Yeah, great.
Yep. And then yeah, I've mentioned that I entered the market a bit late at October 2020, and it was near the end of the free money market. So um in the I think after I opened the account from October to January 2021, the 3 to 4 months, I was just randomly buying the specs and the growth stocks and the growth names that keeps going up, and I tripled my account in 3.5 months, I believe, yeah. And then um that's how my things the situation went south, because after January 2021 the market starts the breadth starts declining.
Yeah.
There's not that much opportunities in the market. Like the stocks are not going straight up, um and I'm getting death by thousand cuts. From the screenshots are the GME entry in late January. So everyone is talking about GME, and I was also looking at GME uh during that time, and especially on from the online forums like Reddit or some online stock trading forums in Hong Kong. Um, there are so many hypes, and everyone is FOMO on GME. Like it went up 2,000% in 2 weeks, and everyone is saying diamond hands or YOLO, yeah, something like that. And I was being the one who get involved in the hype and entered on the exact high of the parabolic move. I entered at 501, and the I think the all-time high would be 513. And after I entered at pre-market, so you can see how much um euphoric I am. So I was, and um after I bought it and it went down, I think 40, 50 or 60% in just uh 2 hours. It halted 4 to 5 times and just go straight down to around 100 or something. And then I suffered from a loss for I think 50%. So yeah, I keep that screenshot, and I always remind myself that uh this is not this is not the this the situation that I wanted to to see again, or I'm not buying it at 500 at the exact high of a parabolic move. And
Yeah.
I really treat it as a very painful lesson. But uh from hindsight, um I would say um luckily I have become a a good, good performer, a decent performer in USIC last year. So if I could do it, and you could also do it. Yeah. And from your study, like you from your if you're determined and you study enough, you could transform yourself into buying in the exact high of a parabolic move to achieving a triple digit return uh in USIC.
Perfect. Yeah, it's a great reminder to manage risk, enter at the right time, and all of that. I think that's a great lesson.
And then in 2021, after January 2021, I was suffered from a really long and huge drawdowns. I think around 40, 50%. Um, so I failed to shift the focus from the growth stocks and to the large caps, which the large caps was more favorable back then. And so I would my performance is not that good. I'm not getting any meaningful progress. So, um, but during the drawdowns, I try to improve and try to learn from to seek more resources from the internet to trying to improve my trading. So actually, I really enjoyed the interview that you have done since then. Since I think that yeah 3 years ago, and there's a comment and you have replied me. So I'm really glad that I could be here to share my experience with all of you. And then I made some notes about the interviews, the podcast, and I also read a lot of trading books. I really enjoyed this one from Nicholas Darvis, the How I
Mhm.
Made 2 Million in the Stock Market. Um, and then yeah, and it's Christian, and I think I learned a lot from Christian Kalayjian's streams and his wisdom. So these are my I did a lot of studies in 2021 and also 2022. So and it laid the foundation of um of myself today.
Mhm.
So yeah, that's 2021, and let me see. Okay, yeah, and 2022. So in coming in 20 oh I could explain more a little bit more about in my 2022, because 2022 was a bear market, right?
Mhm.
I did quite well, I would say, in 2022. It's only a single digit return in the year, but it's still a green year in a bear market. So uh, I catch some of the energy trades that
Mhm.
the long trades. It's the biggest one is Boyle, natural gas ETF. Yeah. That one just is one of the best trade that I've made. And then I think luckily I didn't bottom fishing and try to change my strategies during the bear market. I understand the importance of not catching the falling knives and not like really sitting out in the bear market because there's nothing really attractive in doing the longs. And back then I'm not good at shorting, and I tried several shots and all of them stopped out and resulting losses. So in 2022 I just sit out and basically did did nothing. Yeah. I'm glad that I am able to still make a small progress, a small digit return um in 2022. Yeah.
Yeah, I think that shows a big step up in discipline, risk management, and overall system to do well in 2022. And a specific question about Christian Kalayjian. What were some of the big lessons that you learned from him from watching his streams? What were some of the big takeaways and most impactful concepts that that you took away from his style and how he trades?
The I really learned a lot. I watched a lot of his the live streams recordings from his past. So the biggest takeaway or the biggest lesson that I've learned from him is how he manage his risk. He because back then I was following the normal breakout strategy, like breaking from the high of the base or the high
Right.
of the trend lines, and then I'm setting a wider stop for maybe mostly 3 to 7 or even 8%, mostly more than 5%. So but after I come across Kalamagi has a more aggressive entry tactics. He set tighter stops and he entered it at um n- not normally the traditional breakout entry level. Maybe uh he's focusing on the tight ranges. Like yeah, the
Yep.
tight ranges. He always emphasize about the tight ranges, and when the stock breakouts from the ranges that that's the best timing to buy stock. And the way he drew the trend line is a bit different from what I've learned previously, like the in the earlier stages of my trading journey. Like I don't know how to explain that, but
We'll probably see it on
the
some
way
of the
he
examples. I'd say probably on some of the
yeah, yeah.
examples you'll show how you draw the trend line. So I think that's great.
Yep. And then um I would say this the risk management he always he always talks about risk management and really respect your stops, and those are the really key lessons that I've learned from him. Yeah. Yeah.
Excellent.
So in 2023 I went to Germany for an semester exchange, and I spent lots of time in traveling across different countries and cities in Europe. So, and I really enjoy the times spending there. And then there's the also during my time in Europe in June, I took a trade in Kavana, uh, and then I entered a trade around this breakout on this
Hmm.
breakout, I believe. So, and then the stock just goes straight up 100% in 2 weeks. And this trade makes my P&L an all-time high um, from the February 2021 drawdown. So I've been suffering from a 2 year drawdown, more than 2 year drawdown since February 2021. So I made back all the losses. Not the exact, not in the dollar term, but in the percentage terms.
Yeah.
So I'm until June 2023, I'm finally climbed back from the trough. So I was this trade, I would say it would be my turning point of my trading career, trading journey. Um, because I really shift my focus from climbing back the trough and making back all the losses to really focusing on making the right decision and be disciplined. Like when you're in a drawdown, it's so hard for you to um, just focus on focus on your rules, um, making the correct trades because your mind will just constantly reminding you you're in a drawdown. You have to make back all your losses quick. Um, and after you've made back all your losses, and your mind will tell you, okay, you are now really making the real progress since the time that you are climbing out of the trough.
Right.
So I would say the co-founder trade would be the turning point of my trading journey.
Yeah. So this was a big boosting confidence for you about the system you developed and believing in that you could really, perform quite well.
Correct.
Yeah.
And then, yeah, it would be last year. Last year, I'll enter the USIC. Um, all There are several reasons that I've joined the USIC. The first one would be it would be my last year, the final year of my university studies. So I really wanted to give it a shot to make the most out of it. Um, trying to grab the last bit of the school time because I know that after uh get a 9 to 5 job, I will not be able to put that much time and energy to study or to really trade. And I think in school there's a really good opportunity for you to explore different hobbies. Like for me, it's trading. So I think USIC would be a very good place for me to challenge myself. And speaking of challenging myself, this is the second reason. Uh, I was telling myself that if I really wanted to be successful in trading, really be a consistently profitable trader in the future, I I need to I need to combat with the stress and the high tension of trading full time. And I think USIC good is a really good platform to provide to to make myself accountable for all the actions of all the trades that I've made, and it I think it really helps me to improve my trading a lot. So I'm very lucky and very fortunate uh, to get such a great return last year.
Yeah. Well, again, congratulations. I mean, that's a great performance in 2024. Fantastic.
Yep, thank you. So that's my I'm going to introduce my trading style. And speaking of the actual performance last year, I actually entered the USIC on February. So my January performance was not included. So the actual return in 2024 was 340%. So, but that's not the main point that I wanted to bring out. The main point is uh, during the May to uh, August to September last year, from this equity peak, the equity highs right now, right here, and to September or the August, the swing lows of my equity curve is about 30% drawdown in 3 to 4 months.
Hmm.
So during the drawdown, I really struggled during the drawdown, and I partly it was because I'm doing an internship in the bank in summer, so it really drains my energy and time, and I it's partly the reason, but most of the I think the majority part was I'm not following my rules and not being disciplined enough and taking so many random trades, and this this is the most important the lessons that I wanted to learn to improve the weaknesses that I wanted to improve. Uh, I'll talk more about it later. So yeah,
Hmm.
uh, let's focus on my trading style. And I would consider myself as a swing trader. I normally hold my stocks for around weeks, 1 to 3 weeks if the stock is working well, and I'm a trend follower. I'm trying to catch a big trend and trying to get the most out of the trend. Yep. And I there are several setups that I've take, and most of them, the first three are come from Kulamagi. And the pullback one is the one that I recently trying to learn, trying to study more about the pullbacks.
Hmm.
I'm risking 0.5% of my portfolio per trade. So, but it varies. Like sometimes when I'm not making progress, I'm trying to test the waters. Uh, I will use a smaller risk, and if I have enough profit cushion and the market is doing well, I will risk more. And the maximum portfolio sizing will be 35%. And for the small and micro caps, I would this sizing would be like 25 or 30 because there are more gap down risk
Hmm.
for small and the small caps. And I adopt a tight stop and low win rate strategy, and trying to limit my stop at less than 50% of the stock's ADR, the average daily range. So the maximum uh the maximum stop I would take is around 5%. So if a stock has a 15% ADR, I was still trying to limit my stop below 5%. And I try to focus on on the fast moving stocks in hot sector, which is larger than 5% ADR. Um Speaking about the my statistics or in 2024, uh, I have 104 winners and 319 losers. My average win is around 15%, and my average loss was around 3%. And my win rate is 23%. I would say it's relatively low, and but that's my strategy and how it works. And because I hold my winners for longer, I hold my winners average holding period was 5 days, and the losers, and normally I would just cut it when it was not working well at the day when I enter it.
Hmm.
So I use three indicators: the EMAs, the 9, 21, and 50, and the dollar volume, and also the anchor VWAP. Speaking about setup, I really wanted to quote this tweet from Nick. I really love this tweet, and I would say myself is finding the entries with the highest potential risk multiples. So talking about the breakouts, the EPs, the parabolics, and pullbacks, I think one thing in common for all of them is trying to figure out a lowest um risk entry point that I can manage risk from my entry.
Right.
So um like the market would change. Maybe the traditional breakouts are working less effectively in the current market, but um, as long as I can find a way to manage my risk in the breakout, that is a good setup. And because also I can't predict the return of my trade, and but I can limit my risk. I can set my stop. I can limit my risk. So um, as long as I can get a tight stop and I can in the tight when it just break out from a tight range, or that's my setup. That's the great entry point. And like Nick have said that the question is just can I manage risk here? And if
Right.
yes, that's a good setup.
Yeah, I love what you just said there about I can't predict the return of any single trade, but what I can define is how much I'm risking, where I'm setting my stop loss, all of that. I think that's a huge lesson and something that everybody watching right now should write down as they're taking notes. I think that's a great thing what you just said there.
Thank you, Richard.
Yep.
Uh, so talking about high stop and low win rate, there's a parabolic relationship between the stop and risk multiple. The higher the return, the larger the absolute increase in the risk multiple. From the graph on the right, you can see for a trade with a 25% return, if I limit my stop from 3%, oh, let me bring up my from 3% to on 1.5%, I gain an additional 8R, eight risk multiples. And for a trade with a return of 50%, I gain is 17 risk multiple, additional 17 risk multiple. And for a trade with 75% return, I gain a 25 risk multiple. And so when I'm setting a tight stop and I've getting a higher return trade, I the risk multiples that I've gained from setting a tight stop is gradually increasing. It's not about it's in a uh parabolic relationship. It's not about the eight risk multiples for a 25% trade and the eight risk multiple for a 50% trade. No, it's increasing and increasing.
Right.
So I think that's the mathematical way for explaining how the tight stop and a low win rate would be favorable in trading.
And do you find tightening your stops decreases your win rate, or even if it does slightly, it kind of this exponential relationship and getting more R's makes up for that fact over time and leads to more performance. Do you know what I'm asking, or
Yeah,
if
yeah,
that
yeah,
makes
yeah.
sense? Yeah.
I don't have a specific answer to it, but because I adapt to the tight stop and low win rate
Yeah.
quite early, like in the late 2021. So before late 2021, most of my trades are not working. I'm trading at randomly. I'm over trading, revenge trading, forcing trades. So I don't think the stats during that time is
Super
worth
relevant. Yeah.
yeah, super relevant. So but I'm sure about that. The tight stop would definitely decrease my win rate because that it's just easier to take out your stops. And yeah, but maybe because also because of the drawdowns that I experienced from the 2021 and 2022. I suffered from the death by thousand cuts. So I've already developed a mindset for accepting the losses and taking the losses. I'm not hesitating or really feel painful at taking losses. So maybe it just come to me naturally. Yeah. So from studying charts in the past, I have noticed normally when a stock uh, makes a big move, it tends not to revisit the low of the breakout days. For example, this one is from Amazon um, back in I think 1990s. So when it starts to make a huge move, start to make a huge move, it won't revisit the lows. Normally, when a stock has a big move, it will not go up 10% a day and then goes down 15% a day and then went up 30% another day. Normally, it just um, grinding higher uh, smoothly, like with the rising moving averages. It won't be that volatile and choppy.
Hmm.
So there are always some great entry that I can set the stop at the maybe the day low that it will never revisit again. And this is how I build my conviction for setting a tight stop and trying to trail it most in the most of the move. So there are more examples. This one is from Adobe. So
Hmm.
you can after you break out from this time base, or you can call it a bull flag, and it never will visit the lows again. And even like here, Um, it's also a very clean breakout that never revisit this low. Um, when the stock takes you out from your stop, that means I think that's not the optimal buy point. That means your entry is not right, in my opinion. And so, I that's that's my approach for setting the stops. And also the first solar, uh, I think this should be an EP, and it's back in 2007. So
Hmm.
after I think this should be an earnings, and after the earnings is keep going up without revisiting the lows of the the earnings day, and this is also one of the great example. And plug also in 2020 and 2030. So when it break out from this a bit of cup and handle, the handle on the right side, it goes straight up and never revisit here again.
Hmm. There's the great quote from Dan Zanger: "Winning horses don't back up in the starting block or whatever you call the start of a racehorse." But yeah,
Um,
that's exactly what you're showing here. Is the winners just take off from the entry point and momentum. There's immediate momentum, and they just go.
yep. Uh, for my entry, I normally enter it on when on a stock breaking the prior day highs or
Hmm.
yeah, on the prior day high. So let's take plug for example. I didn't trade in 2013, of course, but I would but for me, if I'm trading in 2013, the best entry that I think the possible entry that I would take would be when it breaks out from the prior day highs, like this area.
Yep.
Yeah. And also the day before its breakout is a inside day. It's an inside day. It it just really I really love inside day because the tightness that normally after an inside day the direction that the stock would go would normally a strong would is a strong trend that it will keep going in that direction. So this is probably my possible entry is breaking out from the prior day highs.
Hmm.
And also another one that I oftenly used is the opening range highs, and I will talk about it on later. And I will also use intraday range high and the Parabolic high, and I will also mention them in the later part of this interview.
Hmm.
For setting the stops, mostly I would set it at the low of day. Um, just like I've mentioned just now, like the most of the cases when a stock re is really making a big move, it will not revisit the low of the breakout day. And but sometimes the price range between my entry and the low of day may be too wide. So if it's more than 5% between my entry and the low of day, I would use the 5 minute entry candle low. And I will also show some examples later.
Hmm.
So let me introduce the opening range high very quickly. So uh, opening range highs is talking about the highs uh, that formed after the market opened. And normally, I will use 1 minute or 5 minute time frame for getting an opening range highs. So when a stock forms the 1 minute candle after the market open, that's the opening range. The high of the candle will be the opening range highs, and the low of the candle would be the low of day. So when I try to enter on the opening range highs, it will be the when a stock takes out from the first minute candle high, and this is the entry, and the stop will be the low of day. And for the intraday range high, sometimes when the stock takes out the opening range high, the high of day, and then it it will fail. It definitely not working 100% of the time.
Hmm.
But if the stock is really bullish or you really think the setup is still intact after it fails the opening range high breakout, I would try to seek a re-entry by entering at the intraday range height. Normally, I will use 1 minute or 5 minutes. I really love the 5 minute one because there's less noise and there's a higher success rate. And yeah, I would try to enter it at break breaking out from the intraday range height, such as the tight ranges over here and serving the 9 EMA. So it will be the entry point and the stop will be the new low of day.
And can I ask you a question, Martin, regarding the opening
Yeah,
range high?
sure.
When would you use the 1 minute versus the 5 minute, or does it just kind of depend on the situation?
I will use 1 minute
Very shortly after the
uh
open, pretty much.
yeah before the first
Yeah.
5 minute candle is formed. Yeah, yeah,
Yep.
yeah.
Yep.
And after the 5 minute candle is formed, I will use the 5 minute.
Yep. Makes perfect sense.
And for sell rules, um there I think most people uh would would use the two of this selling strategy, like the selling into strength and selling into weaknesses. So I use both of them. And for selling to strength, I would the each each sell or the I would call the trim of the position is around 10 to 15%. I found it the most comfortable sizing for my selling into strengths. And there are some situations when the profits is larger than three risk multiples, and I will consider selling part of it into the strength. And when the stock goes up too quickly and its position sizing is getting larger than 35%, it's getting bigger and bigger, and I will try to trim it down and not giving and not get get impact by the gap down risk. So also when the stock is extended from the 9 EMA, I didn't have a um, a an indicator. Like I'm not using an indicator for the distance between the price and the 9 EMA. I'm just uh I'm just using my own observation. Like when I'm feeling the stock is so extended and I'm just trim some off. And the last one will be feeling euphoric. Like most of the cases when I'm so happy with how the stock's movements, how fast it goes up, and that's mostly the top of a move. So I'm using it as my reference. And for selling into weakness, I use trailing stops, and I mostly I'm using the 9 EMA as my trailing moving averages. So but sometimes when I'm in a strong uptrend and I'm entering the position early in the early stage of a move, I will use the 21 or even the 50 EMA for trailing the stocks, the position. Sometimes I may also use the swing low or the bar low. Like for example, um, if I'm getting a breakout from Qs on this date on this gap up right here, I'm just setting I'm just setting my stop in the low of this breakout day. So sometimes I will use the swing low and bar low for the
Hmm.
trailing stop. And I've also mentioned like the stage of markets and the stage of your equity curve. For example, if I'm in on the start of a move, I'll try to trail my position with a slower moving averages to so as to increase the probabilities of not getting shakeouts and grab a longer the larger trend and and a larger profits potential profits from the trend. Uh, but also, if the stock or the market is near the previous highs, maybe, for example, the breakouts from here, when I've entered some stocks at the base here, at the range here, and it went up, and the market went up to the previous the swing highs, I
Hmm.
may consider to sell some to be more aggressive in selling my position to like because there's the higher chance of getting rejected or getting consolidation near
Right.
these levels. Yep. And
So
also the stage of, yeah, Richard.
no, I was just gonna say. So it seems like in general, you more lean into selling into strength versus holding a little bit more for the trend. Is that right, or is it about the same, selling into strength versus selling into weakness?
Um, I think I lean more on selling the weakness
Okay,
because yep, I think it really depends on where is the current situation, like the current how my trades are working, or how the market
right,
uh, is behaving. And normally when I during the start of a move, I would be more aggressive in selling into strength because I'm not sure about that. I'm not sure about whether the market is can keep going higher or just reversing from the breakouts. And also uh in when the market is is a bit extended, for example, in the late November last year, I think it's around here.
yeah,
So it has been uh going up for 3 months. And during and if I'm buying in breakouts here, I will be more aggressive in selling my position because most for just on probability side, there's a higher chance for getting reversing after the market has been going all the way up for months.
right.
So the uh, but for the middle, like for the middle of a trend, if I'm buying a breakout in the middle of an uptrend, I'll be more lean towards the selling to weakness. I'll try to hold a larger part of my position to for catching a bigger move.
Hmm.
So also talk about the equity curve. So if I'm in a drawdown, I would trying to sell into strength more, and because I really wanted to reduce the drawdowns, reduce the risk of being getting stopped out and make a lower highs of my equity. So I'll be more conservative if I'm in a drawdown. But if I'm really making progress, if I'm my equity curve is at the all-time highs or is breaking out, is getting into the highs, uh I'll be more prefer I would prefer to trail my position, a larger part of my position to catch a bigger move because I have the much larger profit cushion to to protect myself for being in the drawdown. So these are uh the some of the best trades that I've made last year. So this is SMCI. Um, I really wanted to emphasize the exit this exit point for my exit on SMCI. I exit the all of my position in this day right here. From my recall, from my memories, I thought I exited the position because of me switching the brokers. So I have to exit the position and transfer the funds to another broker. But it turns out it's not the case. And I'm just randomly think the market has been extended, and I think it will reverse, and I just being panicked or like being overthink, and I just exited all my position randomly right here. So it does not violate any of the sale rules that I've mentioned. Like it's really serving the 9 EMA, is not pulling back very sharply, and it's just a normal day of a upside move, but I'm just not following my rules and exited um, randomly right at the middle at the early part of a big move. So this mistake, I think it cost me more than maybe 40 risk multiples because when I'm following rules, I should be closing my trade right here, or maybe better at the high part of the move. But yeah, it is a painful lesson that I've learned in the early part of last year. So apart from the poor execution of my exit, uh, I want to also talk about a little bit more about my entry.
Hmm.
So I'm buying it at this day. I I'm not. in hindsight, I don't think the entry on this day is good enough. Uh, but uh, but I still manage my risk pretty tight, so I would say it's okay. But I prefer to buy the stock uh at this day here, like when it breaks out from yesterday, the prior day high, and this should be the best entry point. But somehow I think I'm very lucky, so it never violates the low of that day, and it just goes up directly. And another point is talking about the weekly chart of the SMCI.
Hmm.
So SMCI has been on my watch list since I think the December in 2023. So it's been building a base since August. It's around a 6 months base, and it never violates the weekly 21 EMA and keeps building high lows and high highs uh during the base. And then on coming into January 2024, this it forms a tight candles, a two tight candles after failing from the breakouts, attempting the breakouts on December in December. And during the close of this week, I'm telling myself that, oh, it looks really great. I cannot miss this breakout. I cannot let this opportunity slip away. So I'm really telling myself I have to get an entry in SMCI. So maybe that's part of the reason why I my entry was not that optimal, but luckily it still worked. So I think weekly chart, I use the weekly chart quite often, and I really feel the weekly chart is much cleaner, and it helps you to get the bigger picture of the stock's trend. So uh yeah, I'm a I really love using the weekly chart for supporting my entry on the daily.
Hmm.
Yep.
And are you always trying to focus on stocks that on a weekly it's coming out of a big base or a long neglect period? Is that something that you're really focused on when you're choosing the stocks you're gonna be looking for entries on a daily?
Um, I'm focused on finding a good base or a large base on weekly, but that's not a must.
Hmm.
Sometimes the stock could still have a really huge move without getting a huge base or a decent base in the weekly.
Hmm.
So but a good weekly chart really as my conviction, and it will be a really uh it really gives me an edge and for trading the breakouts if the weekly chart also looks great.
Yep. And could you go back to the daily for a second? Because you
So
mentioned how the next day would have been kind of the better buy point, and I know the day you entered wasn't actually an inside day, but it's very similar to an inside day, the tightness,
yep.
all of that, and that's why I think you're right that the next day is kind of the better buy point in that area. But also, I think the gap up that you didn't enter on the gap up, but I think that was also a really good buy point.
Yep.
Where I know a lot of people could have played the opening range high. I think it is a really good buy point there. I interviewed Marius Stamatudis and he entered on that day, so that would be another entry point. One other question I want to ask you here was, given your knowledge now and your experience and looking back here, um, and just kind of talking about your trading system, do you ever add two positions after your initial position, or it's more like your first buy that's where you set your risk, your position size, all of that. Because looking actually where you exited here, it forms another really tight range and almost a secondary
Yep.
buy point right after. So I don't know if that's something that you do or just, obviously that's good price and volume action that you want to see, but you won't add on that extra buy point.
I rarely I rarely add on a position after I made the first entry.
Hmm.
I think um most of them most of the reason is because the ads that I try to take fails.
Hmm.
I'm not sure about the reason why, but because I think part of the reason would be also as I'm setting my stop very tight, so I could really get a decent position sizing in my first if in my initial entry.
Right.
So I do not need a ad for building a bigger position size or a better position size, because after if I'm adding to my SMCI position here, my position will be too large, I believe. And
Right.
given that it has been already up maybe 10 or 15% from my entry. So I think it's partly it would be my experience that my the past experience, and partly it would be my stop loss setting.
Gotcha.
So this is the and my con trade for taking the entry. So this is not a normal breakout. You can easily observe that I'm buying it at the lows of the day, near the lows of the day, after it tries to reclaim the lows of the day. And why I'm buying it there is mainly about the Bitcoin. Um, the entry of the coin that I've take is at
Right
this
there.
day, right there, yeah, right there. When Bitcoin forms an inside day and trying to break out from the prior highs of the day, and I'm I'm just thinking if Bitcoin is trying to make a big move, and I think coin would also follow. So I didn't wait until the coin give me a proper breakout setup, or like to take out the high of the previous day. I think the stop would be too wide, and I can't manage my risk there. So I'm just using the low of day when it's trying to reclaim back from the low of day, and I'm just entering. I think maybe break out from the anchor VWAP during the day. So this is my entry on coin, and I'm also not following my sell rules again. I'm just exiting. I think I'm just panic selling right here. I'm not. It never violates the 9 day, the 9 day, and I didn't revisit it. I didn't get another entry at this breakout day here, and I'm a bit frustrated on myself. But it's still a decent trade that I've booked a good profits into in the early 2024. But yeah, I've still made a lot of mistakes, but uh, but 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 given that I've made so much mistakes and I'm still able to make a triple digit return, so it's really some I would be a good examples for showing that trading does not need to be very perfect. That definitely be some mistakes that you've made uh, throughout the year, but you can still manage to get a good performance, good year if you could focus on yourself and trying to improve on your mistakes and the weaknesses.
Yeah, I think this is a great trade example, and like you just said, I think it's proof to you that there's still room for improvement, right? Which is awesome.
Definitely,
Um,
definitely.
and yeah, I think this is great, and this entry that you have here kind of ties back to what Nick was saying in his tweet, where it's all about can you manage your risk, and you're managing risk at the low of the day. It works. It follows through. Back up of the moving averages starts trending, and I know you say that that sell doesn't violate any of your rules, but I know those 2 days don't look like much on the chart, but that's probably like a 10%, 15% pullback from the highs. So that's going to cause emotions. That's going to cause all of that. And it's tough. It's tough to follow your rules when you've got this great profit and you're giving it back. And then I think right as you pointed out, it sets up another range on the 90 MA and has a fresh breakout opportunity. So I think this is a great trade to review and yeah, it seems like you had a really strong first half of the year that set you up nicely for the rest of the year. So yeah, this is a great trade example. And I loved how you tied it
Yep.
back to the Bitcoin entry. As Bitcoin was catching momentum, it's going to fuel this, which obviously was a very, very strong theme during this period.
Yep, yep, correct. And I also wanted to point out like you could be missing a lot of the best opportunities for having a good year. So you don't need to grab all the opportunities. Oh, I missed this one, I missed that one, and or it you don't feel frustrated about it. You like missing the opportunities is very, very common in trading, and sometimes you just have to let it go and find another one. There will also always be another opportunity in the market. So don't get stuck with the missing opportunities and and letting you missing the another one. So yeah, you don't need one opportunity, the exact opportunities for you to have a good year. So yeah, that's what I wanted to share.
Yeah, and one last thing. So sorry, Martin. Just
Yep.
like you talked about how the inside days can be really good to set up good entries. I really like the upside reversal against the 90 MA that then
Yep.
led to the breakout the next day. It's kind of the same idea, clear pivot point through the high, clear potential change of momentum, right? And that's what we're looking for in a stock that's already shown something special. So that's worth pointing out here on the chart, I think.
Yeah, exactly. And also like the opening price, the opening of this day is really good. Like it's open at the high at the upper part of the pirate day of the pirate trading day.
Right.
So it's kind of it's a it's kind of the weak play from Oliver Cal. Like when you're opening at the upper wick from the pirate trading day and break out from the pirate highs, it's really you can really manage your risk there, and the stop is so tight, um and the position sizing you can build would be very very constructive and very decent. So yeah, this is a great entry from coin. Yeah.
Hmm.
And then this is the GME trade that I've made in May. It should be my biggest win, my biggest winning trade, but not the best trade. I need to emphasize, not the best trade, but the biggest winning trade I've made last year. I've took last year, and you can see my stop is not setting at the low of day. I'm setting a stop at 25.47, and my entry was 26.33. It's around 3%, and from the uh from the 1 minute chart below, you can see my entry would be this candle. I believe it was this candle. When it
Hmm.
breaks out from the pirate candle high,
Hmm.
I just entered at this candle and set my stop um on the low of the pirate the pirate bar, the
Right.
pirate 1 minute bar. Yep. And it has a I know that this stop setting is not low of day, but I think if I set the stop at low of day, it would be too wide. I believe it's more than 6 or 7% that I do not want to take, and it definitely has a higher chance of failing if I set the stop on the low of this candle here, but and not the low of day. But uh, from my study, if you're the optimal entry uh would not the stop would not revisit your stop if you're buying it at the optimal point.
Right.
And I think it also works in the lower time frames. And if it fails, I'm happy to take the losses. And that's how my the entry and the stop setting for this GME trade here. And then um um I I exited half at the highs of the day because it has went up around maybe 30 or 40% at the day when I entered it. So I really trying to trim that down. And I believe it's partly also because it's near the weekly, I think it's weekly 50 or weekly 150 EMA. It would be it's declining. So I think it could be a possible resistance level. So I decided to take half of the position out at 12 risk multiples, 36.88, and then I let my rest to trying to trail it for a bigger move, and eventually it does. Um, so in for it is the 1 hour chart includes the pre-market and the after hours. So after my entry of GME, yeah, after my entry here, it went out. There's I think another parabolic move, which is very similar to my entry on 2021, January 2021. And when I saw that in the chart, I think I have to take some off. I think that would be the buy point in 2021. From that would be my buy point in 2021. And I think I talked to myself, I'm not allowed myself to make the same mistakes again. So it's kind of like the experience who told me to sell it at the near the highs of a parabolic move.
Right.
I'm not sure whether it will be the exact highs, but it's really up a lot. It's up more than I think around 150% in just 2 trading days. If actually not before the market opens. So it's really a big move. As I think it will be very great for me to book the profits here and maybe find the parabolic short opportunities if it keeps going up. And but I didn't find the shorts, but I exited at near the exact highs there. So that's that's my GME trade on in May. Yeah.
Yeah, great trade.
Oh yeah, that's also another reason that I've exited all my position at um uh 76 ish is climbing back to the previous
Highs. Yeah.
weekly highs. Yeah, there's so many resistance the wicks are forming at in back in 2021. So I'm just thinking that there's too much resistance. Everyone are watching those levels, and I think the risk reward of holding my trades there is not good, and I decided to take it all out. Yeah. And another one would be the AMC. Also, I'm really fortunate that both my GME trade and the AMC trade are working so good. Like it's really quick and it's a huge move, just 2 days, and it's really a huge move. And uh, the highest the yeah I earned I my gain will be at 54 risk multiples. There's not the trade that you will see very often. Maybe just one or two within a year, or even there will be no opportunities in a bad year. No such opportunity in a bad year. So I'm really fortunate. I get I catch these two trades, and yep, the entries of the AMC intraday. I believe I've bought the opening range highs on the 5 minute candle breakout right here. And then I put my stop at the 5 minute candle low of that breakout candle. And eventually it stops me out. But I'm still feeling pretty conflicted into the long side of the AMC. So I keep watching it until it forms a nice range near the 2021 EMA on the 5 minute and forms an inside day. I think it's an inside day right here. So I bought the inside day breakout and put the low. I think at first the low would be put at the previous candle low. But as the stock moves higher and break out from the high of day here, and I raise my stop to this breakout candle low, and it was around 3% stop, or yeah, 3.22% stop, and it went up 200 around 170% since from my entry, and I close it when it really reversing for kind of hard from the highs. And there's I believe there's the oh yeah, there's the 1 hour chart.
Hmm.
Uh I trimmed I exited half of the position uh at the pre-market because it was up so much. It was up 100%. Also, part of the reason it was near the declining 9 monthly EMA, and also near the swing lows in 2020 and 2021. And I think it would be I don't think it will clear the resistance like a V shape rebound to the 50 or like to the 50 to the 50 EMA level. So I think that it would be a strong resistance on the 9 EMA on the monthly, and also the swing lows in back then in 2020 and 2021. So I just uh reduce all of my position at around 10 or 950-ish area. Yeah. So yeah, another one would be the SOFI, and this is a more like a traditional breakout, or a much cleaner breakout in my opinion. The SOFI has a move have a move from 7 to around 11 or 12,
Mhm.
and it forms a 1, 2, 3 days the pullbacks and the consolidation near the 9 EMA, and then it also is really similar to the SMCI entry and also the coin entry we're talking about just now. So it's opening at the upper part of the previous candle, and then takes out the high of the previous day, and that's the entry. And I set my stop at the day low. That's the most of my trades are using this kind of approach. So, and then I uh trim a bit on the six risk multiples, and I finally closed my trade when it really closed below the 9 EMA. I was trying to trail it on the 23 EMA, but coming into December, I noticed there are so many breakdowns
Mhm.
in the growth name, so I just lacked the conviction for the general markets to continue going up in a longer term. So I just decided to take it off when I really looks weak under the 9 day, and I exited the rest of the position right here.
For your exits like that, obviously it closed weak on that day as well, below the 9
Yep.
EMA. Do you try to wait until the close to decide if you're gonna take something off, or uh, I assume on a really bad bar you'll manage risk intraday as well whenever it starts breaking down. But in general, are you trying
Yep.
to wait until the close?
Um, I because I'm trading in Hong Kong, like the time zone in Hong Kong is where it's around uh 5 a.m. When the market close. Like yeah, in Hong Kong there will be 5 a.m. when the US market close. So I can't stay until the 5 a.m. And I think I exited the position when it starts with I think it starts
Start
reversing.
reversing.
Uh
Hmm.
yeah, in the earlier part of the day. So yeah, I didn't wait. I won't wait until the end of the day. So yeah.
What time does the U.S. market open Hong Kong time? Just curious.
9:30 for summertime and 10:30 for the standard time. Yeah.
Gotcha. So you have a lot of time for your pre-market routine, but not so much the post-market
Yeah.
routine. Yep.
Yeah, exactly. Yeah. Yeah. And that's the another entry from coin. And this is an EP. I forgot what's the catalyst of this day here, and it's not earnings. I really forgot about that. And speaking of EP, I won't look at the fundamentals of the EP. Like I'm not looking at the numbers, the earnings growth rate, the PE ratio, the revenue growth rate, um, the financial metrics. I I won't look at those numbers. I'm just going to glance through the news and see what's the maybe only the title, like the news headlines.
Yep.
Just get a brief idea of what's the stock doing, why it's going up, why it's gapping up, and then I'm just focusing on the charts. So
Yeah,
yeah,
this
coin that's it.
this
Mhm.
was the US election when Trump got elected, so it was considered bullish
Oh,
for crypto and Bitcoin. So makes sense. Yeah.
I see. I see.
Yeah.
Yeah. And it gaps up more than 10%, I think. Yeah, more than 10% pre-market, and near the power swing highs. and then I think it would be a really good entry if it takes out the highs, the swing highs, the 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 previous swing highs. There will be no resistance uh from the previous base. So this gap up will be a very good entry for the range expansion move. And I just entered at the, I think it would be the opening range high. Maybe I entered a bit slow. I'm but I still can manage my risk at under 3%, so it's fine. And I took some off at 7 risk multiples, and then I finally to take it all out to when it really close week on the 9 EMA. Yeah. Um, um I want to explain more about the trailing stop. Um, Before the close of the 9 EMA, this huge reversal candle here, my original stop was putting at this swing low, this day low, and then when this day formed, and I really think it's not looking good. And also coming into December, the some individual stocks are really crapping down. The breakouts are not working that that good. So I think the market condition is a bit unfavorable for holding this coin for a longer move, and I decided to take it early instead of following the stop I've planned to set right here. Yeah.
Hmm.
And this is another one for lemonade. It's a quick trade. So I think it's a kind of high tide flag move that is went up around 80 or 90% in just 2 weeks and form a tight range here and an inside day again and again an inside day. So when it took out from the previous day high and I entered a bit slow this time, I should if I'm entering more uh uh, ended earlier, I think my stop will be around 2.5%. Yeah, it could be a tighter stop, but 3% is still acceptable. So I take the entry. It went up straight and it went straight up. I closed some at 8 risk multiple and I really and I closed the rest of my trade at this time not at the weaknesses and just selling all into the strengths. The most reason I think the biggest reason that I've decided to sell the most into the strength would be the volume. Like from my study and from the past charts, uh it's kind of like a parabolic move, and in most of the cases of a parabolic move, the dollar volume would peak at the top, like the institutions or the big money is selling to the liquidity. So I think during the half of the day, it already exceeds 50% of the previous trading day dollar volume, and actually the previous day trade dollar volume is already very high. I think it's the the highest in in the past 52 weeks. So I could anticipate that the volume in that day would be very high. Like it would be the uh, exceed that of the prior trading day. So I'm not feeling comfortable for holding a stock that has already moved up a lot and then go accelerated to the upside and with a high volume. So I decided to take all out uh, at this day right here. And part of the reason it also because it's near the weekly 50 or like the weekly resistance levels. So I'm just yeah, I think that's also part of the reason.
A great trade.
Yep. Um, Another one is sound. Is sound. I For the entry, I didn't wait until the breakdown of the pirate day highs. I think I entered at the opening range highs, and I use a 4% stop, which is a bit wide for me. But I really have the conviction of this of taking this setup of sound, and I didn't wait until the breakout of the pirate day high because the stop would be a bit too wide and um yeah, I just didn't follow the prior day high breakouts and just use the opening range breakouts for this time. And another one the lesson that I wanted the takeaway I wanted to point out is the poor selling right here. Another one. So I didn't follow the 9 day and just selling when it breaks out from this day low here. I think it looks a bit bearish, like the bearish reversal pattern, but it turns out to be finding support from the nines and then another breakouts, another maybe 80-90% move to the upside. Yeah, that sometimes is yeah, I'm it's just so hard to follow the rules and be disciplined. Yeah.
And again, like a pseudo inside day on your first buy from that tight day. And then even after your sell, actually, there's the inside day, and then it has like one more leg up. So those inside days, I think, are really critical.
Yeah, exactly. And the I believe the reason why I didn't buy a report this sound at this breakout here is the general market condition makes me a bit skeptical. Um, and I'm not feeling that comfortable in taking too much exposure to the up to longs. So I just skip this breakout, but it turns out working perfectly fine. But yeah, that's part of trading.
Exactly. And it's later in the move too.
Oh yeah. So I think the last one would be the QUBT, one of the biggest winning trade also. Um, it just is on the late in the mid December, and this trade alone, I think it contributes 80% of my profits in December. So um I really love this tightness, this flag built since the late November. It tries to push up and fail and builds a tight range near the 23 and the nines, and it opens strongly. It opens strong, and I think I bought the opening range highs, but get stopped out after immediate reverse after I think 2 or 3 minutes after the open, but I still managed to find a re-entry point after it holds and trying to break out again. So um, I've received a question uh from another trader in I think in Kulamaki's Discord for saying that he's drawing his trend line like that, and he's asking me why I'm not entering right here and entering at this level. So it looks not that much, but like it just less than half of the bar, but actually it's around 8 or 9%. So it's really crucial for setting a type stop and getting the correct entry point. Um, if you're following the traditional breakouts, you may buy it even at breaking the prior swing highs, like right here. And it just so hard to manage the risk if you are following the traditional breakouts, the breakout rules. So I think if I'm setting a type stop and I have to get my entry very precisely, sometimes it might have to be a little bit anticipating the breakout, but mostly I would trying to buy it when it break out from the prior day highs. That's the range expansion. Like every start of a move involves the breakout of prior day highs. So that's my approach. And then I sell most of it into strength, also because of the volume. You can see the volume and also the acceleration to the upside. And I just feel like it will be another parabolic short opportunities, but no, I did, but at least I entered all my longs there, so it's great. So sometimes studying parabolic shorts does not mean that you have to take the shorts, but you can help you to exit your longs in a good position, in a good play, yeah, in a good rise within a strong upside move. Yeah. And this would be my 5 minute entry. I think it would be a breakout of the anchor VWAP
Hmm.
from the open. or from the high of the day. And then I just put my stop at the 5 minute candle low, and it never violates it. And it actually never violates in 9 EMA since at 145 that day is just insane. So
Yeah, what a trend. That's
what a
beautiful.
trend.
Yeah.
Yeah. And then this is the best trade I've made in 2024. Like really the best trade. I I I entered the SMTC at 46. Yeah, I'm not shorting. I'm taking a longs. So I entered at the nearly the high of the day, and I didn't follow my sell rules. I didn't follow my stops. I didn't set my. I think it's because it's reversing too fast after my entry. Like I think after my entry, it just uh breaks down from the opening range high 1 minute or 2 minutes after my entry. So I failed to set my hard stop, and then I'm telling myself, it's looking bullish. It might find support from the previous highs, from the pre-market highs, or the maybe the 5 minutes rising EMAs, but it turns out it just keep crashing down, and then I decided to take my loss at 41, and it's around 10% or 12% losses only from this trade, just because I'm not following my sell rules, not following my stops that I've planned before my entry. And this is a really hard lesson that always reminding me for following my stops. And I also remind myself, like if it's really going to the upside after it fell the opening range lows, if it's really reversing, there will always be another entry. Like
Right.
there's yeah I could get another entry, and you just don't need to get stuck with the losing position and increase and letting your loss growing bigger and bigger. And I I would say this is the best trade that I've made, because the lessons I've learned is the most valuable from all of the trades. And the winning trades, there definitely could be some lessons that could be learned, but the losses are the most the memorable one, like the pain.
Well said.
And actually luckily, I after I took it off that day and another day, another thing, it gap down for 20%, more than 20%. So yeah, I'm very lucky that I didn't hold on my losses, hold on to my losers, and getting another huge destruction the day after I take it off. Yeah. And another one that huge mistakes that I'm making is the also from CLSK. Um, I I don't know what I'm doing, because it's it's on the June, like June last year. I'm
Hmm.
having a drawdown, and I'm doing my summer internship, and I've I'm not trading at my A game or even B game. I think I'm in D game or something. I don't know what I'm doing. When I look back, there's no tightness right here, and it's near the previous highs. I don't know what I'm doing. And then after my entry, it starts reversing. I don't know why I believe I'm just forgetting to set the hard stops, or or just not following the stops, not um, not allow not allowing myself to take the loss. So I hold on to it, and another day there's a gap down, and then there's another 10% losses from the CRSK trade here, and it could be easily prevented. Like from the entry, I could have prevented it. It is not a good entry, and even I took the entry, if I'm setting my stop and following my stop, I'm not having to suffer from a uh 10% losing trade. So yeah, it's when I'm look back to some of the trades I've made, is I sometimes really don't know what I'm doing during that time. Yeah. Oh, so this is the scans and watch list. Maybe I can uh open my trading view for
Yeah,
better
that'd be great.
presentation.
That'd be great. Yeah. And just talking about what you were just discussing, your entry is often your best defense because like you said, if you've got a good entry, you know exactly where you're getting out. Is a clear and logical spot where you place your stop. And if you're not entering at a proper spot, then everything becomes nebulous and you have all these questions that you're asking yourself and there's all this confusion with yourself. A proper setup at a proper entry point, everything is clear cut about where it fails, and that's where you place your stop. And that's kind of what was missing in that last trade.
Yeah, exactly, exactly. So when a trade really works, like the stop is really clear, and I'm really I, I really know where to cut the losses, and why I'm taking this entry. So
Exactly.
when you are confusing about your whether to take this trade or not, normally just don't take it. Like normally it would be a loss. Like if you're hesitating or um confusing whether you should take this trade or not. Yeah. So I have three scanners, major scanners. Is it am I following the
Yeah.
sharing the trading view?
Yeah.
Okay. So the one is the what this one is pre-market. I will just open the scanner and will import all the stocks on the pre-market scanners to the
Watch this.
screening watch list. Yeah, and then I will just open the screening and then go through one by one. And the, it is the pre-market scanner is trying to filter the pre-market gappers, the one that's gapping higher.
On big volume. Yeah.
So yeah, with big volume. And this is what uh I would mostly spend around 10 to 15 minutes to go through most of the stocks in these scanners before the market opens. And then another one is potent scanner is trying to scan the stocks uh that's the best performance from the prior trading day. So normally it would be before doing the pre-market scanner, I would try to do the potent scanner first. So trying to get a brief idea of what's the stocks that are working well in the prior trading day, and are they in the same sector or in the same theme, and those are the key things that I would like to look at and dig deep on. So sometimes people asking me how to get how do you catch a hot theme or a key sector for a big move. Normally, it just comes from the scanners. If there are several stocks in within the same theme, within the same sector, is showing up in my scans, it tells you something about the sector, like the money is flowing into the sector, and then you should be having more attention to those stocks.
Yeah, like the quantum stocks, I remember they're all gapping up in pre-market on a day that they're gonna go. So identifying that theme is super critical.
Yeah, yeah. Sometimes they're just yelling at you
Yep.
at the scans. Yeah, and then the last one would be the leader one. Normally I would just do the scan at the weekends of each week. So I'm just I'm just putting all the stocks in a descending order for the performance uh from the past month, so I can know from the past month which stocks are performing best, have the best performance during the last month. So maybe there are some stocks that have missed out from the scanners or from my watch list that they are actually performing great and have maybe the relative strengths or they're leading the market, and this is the leaders scan. Yep.
How long does
And
your
then
routine usually take you to go through these?
in a strong uptrending market, maybe I would take around 30 minutes for all the scanners, and also uh manually scrolling on my watch list.
Mhm.
So around 30 minutes. But for bear markets, or maybe a correction, like now, there's not much to watch. There's just not that much stocks are popping up in the scans. So maybe just 15 to 20 minutes for a normal for a correction or a normal market. And sometimes you can use those the number of stocks that shown in your watch list uh as the as a factor to analyze the market condition.
Right.
Yeah. And then I have several watch lists. This one is the main watch list. I'm putting the key stocks that I would like to track into that watch list, and I'm the holdings, the ideas that the trade that I wanted to take for the next or the coming trading day, that I will put it at this section. And that's the bullish one, the bearish ones, the key stocks that I would like to watch. And I also added Qs and the SPY as a benchmark of the day. Yeah. And then there is the leading one. The leading watch list is as I said, the only includes the leading stocks. Normally, the stocks in the leading watch list would be in a strong uptrend. Like the 9 is above the 21 and the 21 is above the 50, and I would consider as a leading stock. So in a correction like this, you can see there's only 5 stocks in my leading watch list. So the number of stocks in your watch list is also a very key factor for you to analyze whether the market is favorable for taking longs or taking breakouts, whether it's healthy or not. So I remember in early December last year, there's the number of stocks in the leading ones or in the mediocre ones are uh getting smaller and smaller. Like there are more stocks in the lagging watch list. So I don't feel quite well about the changes in those numbers of stocks and the patterns. So this is why I'm a bit skeptical about it on the market conditions in December last year. And then the mediocre one would be there's not a significant clear trend, there's not a strong trend for the stock. Maybe the stock is basing near the EMAs. So I'll put it as the mediocre ones. And maybe sometimes you can see, for example, like Hood, the EMAs are trending down and the NICE is under the 21 and under the 50, but I would still put it as in the mediocre one. Partly it was because the weekly chart is still looking a clear uptrend, is still looking okay, it's still looking good. And it it also shows some relative strengths compared to the really lagging stocks such as maybe First Solar or EMPH. They really have a strong downtrend, and the Hood comparatively is stronger than them. So I would want to put it in a stronger watch list to identify the relative strength between the stocks. And the lagging one is just lagging in the downtrend that just keeps going down. And yep, and that's the lagging ones. And there's also the pillar watch list is mostly about the mega and the really large caps, because the large caps are really affecting the index, really affecting the index. Like Apple is really affecting the Dows, and Nvidia is really contribute like a huge part of the Qs and the SPY. So I really wanted to look at the the move of the big or the mega caps. So like if the Microsoft is bouncing towards the declining 9 and 23, it is not a good sign for taking longs, for being too aggressive in longs if I'm trying uh, to buy the rebound from another stocks. So actually in early February, when um Microsoft gaps down and failed to reclaim all the moving averages before the Qs really having a crashed to the downside, like in the early, February, the Qs is still holding up quite well. And but if you're looking at the individual stocks, like for example Microsoft, it looks so weak and made a lower low, and failed to reclaim back to the key moving averages. And that's a bit of the warning sign from the market that's telling you the market is not acting right. That you should not be that aggressive in taking the longs in the early February. And this is the tier 2 watch list, and mostly the growth stocks and the micro caps. And the premier section, it would be the ones that with average dollar volume with 100 million plus. So I'll put it as the premier section, and the rest would be the illiquid ones, the relatively liquid ones. So I'm always preferring trading the liquid ones. So I'm just putting two different sections here to let me better identify the liquid ones and the illiquid ones. Yeah. So I think those are my watch lists. And do you have any question, Richard?
Yeah, on a particular day, how many stocks are you typically focused on to enter at the open? How many are you kind of focused on for that day for potential entries?
Normally, the highest number in a strong bull market would be around five,
Hmm.
or sometimes even more. But I didn't have a limit, a maximum or a minimum limit for the stocks that I would really wanted to watch closely, or really wanted to take a trade. It really depends, and sometimes it just none, like no stocks is interested,
Right.
is setting up for my trade. So yeah, and
Yeah, and
yeah,
I think
yeah.
it's a common question for folks, how do you get to that last actionable list for that day? What are some of the criteria that you consider to say, hey, I really want to focus on TEM today,
Mm.
RGTI, those are my focus. What sets those names apart from any of the other stocks that you're tracking?
But this is a really good question because there's so many factors to consider. And for now, I'm setting Kafana and MicroStrategy as my key focuses the next trading day. Um, it was because I wanted to take the shots from the rebound. Like I maybe will elaborate more. I will elaborate more later, or maybe I can elaborate now.
Yeah, that'd
Like
be great. Yeah.
yeah, the from this correction, like I've taken some many shots near the converging EMAs uh on the declining EMAs when they're converging. So for example, for Kafana, and on this day, on this area right here, wait, yeah, on this area right here, and it has a gap down and continues on the downside, and then rebound to the 9 EMA, or near the 50 EMA, and those EMAs are declining and really close to each other, really trying to really compact. And then they start Cafano rejected to the 9s and the 50, and started to decline, and started to reversing and rejecting and reversing to the downside. And those areas I found would be the best spot to take a shot and have the highest risk reward, because I can easily manage my risk there, as I just set my stop near the high of the day. So it's really similar to the longs, but for the stop setting. But for the entry point, I'm not going to wait for breaking out for the low of the previous trading day. I'm be more aggressive in taking the shots. I would just enter it near the resistance, and if it's going to be rejected, normally it just continues to the downside. It would not revisiting the highs again. So it's really similar to the longs that I've the approach, the methodology that I mentioned just now. And but just the entry point is another different. So for Kafana here, it's also a bit similar for the situation in the early March. Is a strong rebound, and pulls back to the 9 and finding support on the 9, but the EMAs are really clustering together. And normally when the EMAs try to converge, and the direction for the next for the breakouts for the range expansion is normally the correct direction to go. Like the maybe the short term or mediocre trend. So it could took out, yeah, actually it could be a long entry, like it's setting up a inside day.
Mhm.
And if it's opening strong tomorrow, it could be a long. But I personally, I don't. I think I would skip the long side of this trade. Is just because I think the kills that like the major indexes is really near the resistance. It's near the spice near the 9 EMA, and the kills are weaker. It's even weaker, and I'm not that I'm not feeling that comfortable for taking the longs when the market is on a strong downtrend, really strong downtrend. And comparatively, I think SPY has a higher tendency or probability to be getting rejected from the resistance, such as the nines or maybe the highs of this
That day.
bearish candle, yeah. And um, in the probability side, I'm just leaning towards the shorts. So I'm trying to see whether Kafana maybe could show some weaknesses near the 50 EMA, or even the highs of the previous swing highs, or maybe the anchor VWAP of the anchor VWAP is below it. So it's not the main wash this time. So sometimes I would use the anchor VWAP from the swing low to this uh to
The high.
use as a potential resistance. Yep.
Yeah. No,
Um.
it's funny because I've been studying and trying out basically this exact same setup. If you bring up Reddit, this is an example I was taking a look at. Let me see if I can annotate. There we go. Basically, you had the leg down, shelf that
Yep.
forms here, and then gets rejected from the moving averages here, and then this day I think would
Yep.
have been the ideal entry into the 9
Exactly.
EMA. Either entering, let me clear my drawing. It's getting a little bit messy. We had a slight gap down, rally into the 9 EMA, and then as it
Hmm.
reverses down, that's probably the spot where you can manage risk right at that high of the day and get a good risk reward. And this one really fell apart nicely,
Yep.
as a lot of them. So yeah, no, I think this is definitely a short setup worth studying, but we don't often get to use the short setups because usually the market's in an
Yeah. Exactly.
uptrend. So
I think I also enjoy Reddit exactly the same. Also near the highs right here.
yeah,
Yeah, exactly the same with you. And but I'm taking the shorts. Yeah, from the exit of the shorts, I'm taking the exit more aggressively than the longs. I'm not trailing
yeah,
the shorts. Like the longs, like the close above the 9 EMA. I think most of these shorts are selling into the strength. I close all of my shorts, I think near the lows right here, because near the 150 EMA, I thought it would be a potential support, but no, it just continues
yeah,
to the downside. And but no, but I'm still happy to take the trade and book some profits on Reddit. And yeah, I'm not feeling regret or feeling bad about it, because my plan was to only to catch the downside or to around the 150 EMA. And yeah, I'm
yeah.
not catching the home runs in the short.
Yeah, I'm same way. Faster sell rules for shorts, and one more reason why this Reddit one was set up nicely for a short is this horizontal resistance means that it
Oh
really
yeah.
was breaking down below this base low where a lot of stop losses probably are. A lot of people have positions from. So that's one other thing I was watching with this setup here.
Yeah, totally agree. And I think one more point is want to point out would be the 50 EMA. Like it's
Yeah,
never violate the 50 EMA since the uptrend, since the breakout of this day here, and then it starts to build a flag under the 50 EMA, and that's not the thing that we would like to see if we're trying to if there is a move to the upside. So it just looks bearish to me, and that's another key reasons that I wanted to uh short the Reddit here. Yeah.
Yeah. Were there any other good examples of this type of trade that you've taken recently?
Um, the one would be SMCI. I've exited SMCI yesterday, just because I wanted to reduce the exposure of shorts as the market is trying to bounce,
Right.
and I really wanted to focus on the micro strategy or the founder short so that I'm not being too crowded on the short side. And yeah, as I've said, it's great to book some profit for the short. And I'm not trying to um uh, uh to trail the shorts for a long period of time. And the one I've the entry point for SMCI was the day right here,
Yep.
and it's not it's not it's close to a breakdown. It's similar. It's not that buy selling in the resistance. It's just I'm just selling it at the previous day low this time. And for the SMCI, I've one of the main reasons that I would really want to focus on SMCI is the weekly chart, as the weekly chart is really on a downtrend, and the key moving averages are really close to each other. This this I think that would be a inverse version of a long, like it's trending down and there's uh, clustering together. So also in the daily, also in daily, the key moving averages are really close to each other, and it actually looks very clean to build for drawing a uptrend line, like
Hmm.
the trend line right here. And when it's violating the lows of the day of the previous trading day, and I just took the shot at the opening range lows, I believe. So and I closed it at yesterday, and that's one of the trades. And yeah, do you have any question, Richard?
No, I just want to point out, just like the longs that you pointed out, it opens nicely basically in the lower wick
Oh
of
yeah,
the previous day. And if you think about it, there's probably a lot of people who have stop losses at that low, the prior day's low, and then the low before there, and then even that like short bit of tightness a few days before. There's probably a lot of lows there, so it took all of those out in one bar as it broke lower. So that kind of added fuel to the fire here. And then like completely agree with you. You know, sell rules gotta be faster here, especially as the market gets stretched to the downside too. You don't want to get caught too much in a counter trend rally, which can be pretty vicious. So, and similar to SMCI, MSTR, the weekly chart, you know, it already had that parabolic move. You know, it's more in a downtrend, although this has been a little bit stronger as of late for sure. You know, it's still
yep,
got kind of that downward trend, downward trend line. That's probably, is that the 90 EMA on the weekly of
yeah,
the
the
purple
9
line?
EMA.
Yeah.
Yep,
So it's kind of got that look to it as well. So we'll see what
yep.
happens.
Yeah, and so you also pointed out the declining 9 EMA on the weekly is also one of the main reasons that I wanted to focus on the shorts for MSTR. If MSTR MicroStrategy is going to make another downside move, it should be rejected from the declining lines from the weekly, and so here will be a very good risk reward or entry level if we're trying to play a short side. So of course, if it's holding up and is keep building higher lows, it's great. Then we maybe we could consider the long entries with the if the indexes if the market is improving.
Right.
But for now, I'm looking for the shorts more. I'm leaning towards on the shorts, and it's really near the declining 50, and also all the EMAs are really uh packed packed, and they're converging. So yeah, that's a key level that I would like to watch. Yeah.
Yeah, what stands out to me as well is the high from that recent downside expansion move from 2 days ago. That
Yep.
high might be a
Here.
level two to consider
Hmm.
for potential resistance for a spot. So we'll see what happens with MSCR because it's been interesting
Exactly.
since like this since this move lower, it refused to go lower and bounced
Yep.
really strongly. It was like one of the strongest stocks in this period, but it's still got this longer term pattern with the parabolic, you know, short type entry and you know Bitcoin, isn't as strong as it was. So it'll be interesting to see what
Mhm.
happens with this name. It could go either way, but I agree. Right now, it's more set up structurally for more of a short side entry than a long. But it's worth watching, and will be fun to watch whatever happens.
Yeah, always be open-minded for
Yep.
both directions. Yep.
Yep. Perfect.
And I really receive a lot of questions about the market conditions, and this is also one of the major areas that would that sometimes would be a bit confused and um don't know how to do to evaluate whether this market condition is good or not, is favorable or not. And I really like the this tweet from Sela
Hmm.
and just recently, and I really agree with that because I think the one thing he mentioned, that one thing let me point out, one thing all traders have in common is the feedback from their own P&L, and it's a universal rule for all traders no matter their style. And this is very, very true because um in Twitter or online, there are so many traders are giving out their opinions or showing their performance or telling you what should you do in the current market. But actually most of them are trading differently. They have different setups, they have different entry and stop settings. So it could be completely different from you. And I think the when I'm in the earlier part of my journey, I'm sometimes would get distracted um from others' opinions or others' ideas. Like they're sometimes taking yeah, sometimes they will be aggressive in certain market environment while I'm having death by thousand cuts. So sometimes it may not be the favorable for your setups, but for others. So I think the equity curve feedbacks is really really helpful for you to identify whether the market is favorable for your own trading strategies or the for the style. And if the indices are weak and but your trades are working well, and you keep going and don't let the indices to affect you that much. And you could be a little bit conservative, but as long as your trades are working, I don't think there's a reason for you to like liquidate all your longs and then uh be so cautious and vice versa. So I think the equity curve feedback is really a key a key metrics for a trader to identify whether the market condition is favorable or not. And then I've also mentioned the scans and watch lists, and if they are uh, down, there are so much stocks downgrading from your watch list from the stronger one to the weaker one, and that's the market that you should not be that aggressive in taking the longs. So the last part will be the indices. Like for example, the if the indices is trending down, the 9 EMA is under the 21. It's not a favorable time for doing a long. Maybe it's the favorable time for doing a short. And sometimes when I before I enter a trade, I would try to look at whether the indices are at a potential resistance, whether they are bouncing into the declining maybe 21 or 50. And if they're very close to the resistance level, I sometimes may skip some good setups because the in normally there those are the times that the fake outs occurs where the individual stocks are looking great, but the indices are at the resistance and they're reversing, and the breakouts are also starts reversing from the individual stocks. So indices, the key levels would also be one of the a great metrics to look at before I enter a trade. Yeah. So I think I'm a boom and bust trader. Even I'm not even for now I'm not that confident I'll be a very consistently profitable. And I do experience huge drawdowns and many losing streaks, especially during the late May to the early September last year. It's more than 30% the drawdown from those months. And from from the drawdown, I really learned about the importance of journaling your trades. Like for by journaling your trades, that you could very easily to look back and reflect on the mistakes that you have made. Because if you do not journal your trade, it's just so hard to to find where's your entry for the trade 1 year ago and the exit maybe 2 years ago. You just can't. It's just so hard. So um, and also by journaling the trade, you can easily calculate the metrics. For example, the maximum drawdown, the number of winning trades and losing trades, etc. And it's very crucial for you to improve and find out your mistakes, which is which that everyone has their own mistakes. And how to find your own mistakes is by journaling your trades and analyzing uh from your previous performance. So and yeah, and do not blindly follow other traders. Like for me, like I really uh adapt adapt different rules, like the nine EMAs, the trailing stop for the nine EMAs from Christian. But sometimes I would also tweak to optimize a bit for the rules to suit me. Then I'm not blindly following what other traders are telling me or other traders are using, because everyone has their own unique approach or has their own preference or personality. So you have to find your own rules. You have to uh, do a deep dive and trying to find a sweet spot for you. And then I have three major weaknesses, or um, the problems that the mistakes that I've often made in trading, the revenge trading and increased risk per trade in a losing streak, trying to make back my losses as quick as possible. And normally it just go the go the another way. It just increase my drawdown and induce more losses, and also not obeying stop. But I would say the second and the third point, I have improved it quite well. I'm setting hard stop at every trade. I will size down when I'm in a losing streak. But in revenge trading, sometimes I'm still making the same mistakes by trading in a unfavorable market environment. Um, I still have a long way to go to for this for these mistakes and weaknesses. Yeah, but I'm glad that I'm aware of it. So I hope it could minimize the impact or the drawdowns that I've made by the revenge trading.
Yeah, and just like Christian, uh, I think something that he's focusing, and he identifies as well as a boom and buster, he's focusing a lot on limiting that monthly drawdown and trying to cap that as much as possible. Is that something you're looking into considering as well to try to smooth out that equity curve a little bit?
That's exactly what's
Oh, perfect.
the
Yeah.
next slide I'm prepared. And in the early this year, I've just said that reducing maximum drawdown is the number one goal for me this year. But unfortunately, in January, I was uh get suffered from a 18% drawdown. I personally think it was quite huge. I don't. Hopefully I could limit my drawdown below 15%, preferably. But I think it may be some improvement compared to the 30 or 35% drawdown last year. But I think there's still lots of room for improvement for that. Mostly because in January, I was getting clapped from both the long and the short side. I'm bearish, but at the same time, the short is not working. I'm trying to switch taking some longs, but the longs is also not working, and then I just get clapped on the both sides. Um, uh, and also it is I've just shared it is the surf the surf robotics, the gap down, the 30 or 40% gap down in surf, and also caught me. I think it's just this day right here, from a 8 or 9% single drawdown in a day. So it's really frustrating, but I still managed to. I did not allow myself to make a lower low of my equity curve. So uh, there's still a long way to go, and I really wanted to limit my drawdowns and the overtrading weaknesses. So I'll keep improving that. Yeah. Oh yeah. Okay. So I thought it was I have already shared it, but no, it's here. So I've entered the serve at this breakout day here. Very similar to the longs that I've taken in 2024. And but luckily, very luckily, the Nvidia news pops up, and there's a 30% or 40% gap down into this day here, and I exited at the the exact low of the day. I think I'm really dissatisfied about this entry, like the exit. Mm, when it was in when the market opens and it tries to reclaim back to the declining moving averages. And I think the partly I think the major reason that I refused to exit the trade at the higher part of the candle here is because you can see from the uh from the equity curve, before I suffered from the 8 or 9% loss, I'm finally grinding back from the 18 or 19% drawdown
To
from
break even.
January. Yeah, it's getting to the break even, and finally I'm making some progress. But the gap down, it's just I can't control the gap down, and it really strikes me when I'm feeling optimistic, a bit optimistic about my performance, but no, the reality strikes, and I think that's partly the reason that I refuse to take the trade at the upper part, and I think the exact lows would be 1267, and I and exited at 74, so near the exact low. Um, it's not as it's not acceptable, I would say. Yeah, I should have taken it at least a break down to the low of the opening range lows area. So it could prevent me from another 10 or 15% losses from this trade here. And this trade also reminding me the gap down risk of a small or micro caps.
Yeah.
And luckily I'm not scaling very big in this candle in this entry. So my it's not that devastating to my equity curve, but still a hard struck. So yeah, this is I would say the best trade I've made because I've learned so much lesson um, from this trade. I will not allow myself from that to happen again. And yeah, that's the that's the surf trade the loss that I've made the take. Yeah.
Well, excellent. Thank you for sharing that because I think like you said, that's something that you can learn the most from, and the viewers can learn the most from. So I think that's perfect.
Yeah, thank you.
Yeah.
And so treat trading as a lifelong business, and um I remember there's one day uh I was daydreaming and trying to imagine um how my trading would look like for maybe 10 years from now. And actually I really feel I'm feeling very lucky or fortunate that I've really achieved such a good performance last year, and I never expected that. So I'm really treated trading as a marathon. Like if I could be consistently profitable after 10 years, I I'm still happy with it. So and um and I'm trying to imagine if I'm being successfully profitable, being a professional, a full-time trader, am I making the same mistakes again? Am I still overtrade and getting the random entries that I've shown, like the CLSK entry? Am I still refusing to take the stop like the SMTC? And I don't think any successful or profitable trader that you have interviewed in the past would share with us like, oh, I'm over trading and I'm still being profitable and I'm making the random trades and I'm still beating the market. I think none of them will make those mistakes, and I just realized that uh, I have to be more focused more on the longer term growth, like the personal growth of a longer term instead of the instant impact of my P&L. Whether I'm the more important thing would be whether I'm following my rules, whether I'm disciplined or not, rather than getting a winning trade, like by just randomly getting an entry and just I don't somehow get a winning trade from that. And I just suddenly realized that's not the situation or the position that I wanted myself to be in. And yeah, if you're trying to be successful in trading, you have to get rid of your mistakes and focus more on the process, the progress itself instead of the the res the return. Yeah,
Yeah, I think to add to this, and it's kind of exactly what you said. Um, Jared Tendler. I don't know if you're familiar with him, but he's got a concept
yep.
about the inchworm, and you've talked about your A game, B game, C game, D game today. I think whatever your experience level, people have been trading for decades. There's always going to be mistakes and periods where they overtrade, but it's about at large improving your A game, improving your B game, improving your C game, and getting those closer and closer together. So even if you overtrade a little bit, it's not going to set you back and have as big a drawdown as it would during your first few years of trading, where you're still developing your system, figuring things out, all of that. So I think this is a worthy goal for sure. And thinking long term and just focusing on making progress, improving that A game, B game, C game, and getting those tighter and tighter and closer together, and just trying to improve, slowly over time. I think that's exactly the way to go.
Definitely. Yeah, can't agree more. And so uh I've in this call I've sent a message to myself in 2050, and yeah, I really didn't expect that I would be um I will having such a good return last year. I really because in 2021 I was suffering from a 40 or 50% drawdown. I I'm just feeling I it's a long way to go. Um, I will not be profitable maybe in the coming 5 years or so. But I've really it's a really big project. It's really a marathon. If I'm making it in 2050, I'm still a successful trader, right? So um um I hope all of you could also um learn from my stories and try to take most of it and also be successful and getting your own trading methodology or your own trading style. And it's hard, but uh, as long as you're sticking in the right way and improving your mistakes over and over, and you will be gradually you must be your result would follow. Yeah, your result will follow. Yeah. And I really love the quote from Mark Minervini. Uh, I saved this tweet from in 2022, but I would say I didn't realize how important it is. Yeah, I know it's important, but I really didn't realize how important it is for following to lose the least amount possible and to make every decision a good reward play, and the result would take care of itself. I know it's important, but after I went through all the all the ups and downs, and I think this quote from Mark is I really enjoyed it, and it's really true. It's really true. Just focus on every decision, not the results, not the P&L from that particular trade, not not from whether I can make back all the losses, whether I uh how much I need to make to climb back the trough, and it's not about the P&Ls, and it's about the decision, the progress, the process. So I think the last part that I wanted to share is this quote. One day in retrospect, the years of struggle will strike you as the most beautiful. And it really synchronized with me as, like I've said, I've suffered from a huge drawdown in June to August last year. And after, in the late August and the early September, I suddenly realized it is very similar to what I've experienced in 2021. Like after late February 2021, I was in a huge and prolonged drawdowns for more than 2 years. And I was telling myself that if I'm still trading not following the rules in disciplinedly, and I will be tripped over the same stone again. And because of the previous the struggles, and I learned a lesson and do a thorough review of my past trades, of all the mistakes that I've made, and luckily the result was far better than I expected. And I really believe the obstacles, or those struggles that you have experienced would really benefit you and pave the way for your success.
Excellent. Well, Martin, thank you so much for sharing all of this, going through everything in a lot of detail. And I have no doubt you're going to be trading in 2050, and I think maybe even 2030 and 2040, you'll already have achieved those goals that you want. So,
Yeah.
And I think
Hopefully.
you really are a testament to putting in the work, like you said, going through your trades, analyzing your weaknesses, identifying them, because that's the first step to improving them, right? And
Right.
you've identified where you are as a trader, what stage you're in, boom and buster, and you know the things that you need to work on to improve. And like we talked about earlier in this interview, you managed a 283% return even with the mistakes that you recognize you make.
Yep.
So just think
Exactly.
of there's so much to improve on. There's always going to be something to improve on, and I think you're well on your way. And again, just thank you for taking the time to share this. I think this will be really helpful for everybody watching. And make sure you guys thank Martin in the chat or down below in the comment section for sharing all that. I'll leave a like as well. Martin, is there anything else you'd like to say to people watching? You've already shared an immense amount. Or is there something you want to say to your future self, maybe watching this back to kind of see, what you were thinking back during this period? And actually, one last thing I want to say: just think about how much
Okay.
you've improved now compared to 2021 and 2022, and just project that into the future, and you'll see you'll always be improving. And I think you'll have a tremendous amount of success in the future. So thanks again for taking the time to be here. But yeah, is there any last bits of any last messages that you'd like to share with everybody?
Oh, thank you, Richard. And just keep going. If you're really passionate about trading, you're really devoting, you really want to devote the time, your life in trading, just keep going and keep improving. It's trading is hard, but it's not that hard. And you could, if I can do it, you can also do it.
Great. Well, thank you again, Martin, for sharing everything. Thanks everybody for watching. If you enjoyed, like I said, please go ahead and leave a like down below. Thank Martin in the chat. I'll drop his Twitter down there as well, so you can follow him there. And we'll see you guys in future videos. Take care.